This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus, you got 9 out of 10 stars from the Coin Bureau guy. Bityard. Hello everybody, welcome back. Let's have a look at Bitcoin. We're going to have a look at oil as well, as it would appear that we might have called the top on oil. It doesn't mean it's the absolute, it's going to go straight down. I mean, it's been, since that video last week, we basically plummeted 16.5%. For all those people that were saying, oil, it's going straight up to the moon, man. Oil, bleh. And I'm like, looks a little toffee to me. Now the reason we're focused on oil is that over a bit more time, so obviously this is going down, this is nice to see it going down obviously, so we can fill our cars up a little bit more than we're used to, is that I'm trying to front run the CPI data. We're trying to number crunch in our own heads by the use of charts what inflation is going to read on the next CPI. And yeah, there's loads of things that go into CPI, but one of them is fuel, right? Everybody's paying bloody through the teeth for oil, right? Fuel prices, that impacts food prices, as we all know. Like most of food prices constitute travel. You got to travel. You got to get your potatoes from the farm to the supermarket. You got to get this to there and there to here, and then all that back to your house and blah. It costs a lot of money to transport the food, and so fuel prices are baked into food prices. That's a little bit of a pun there. And so yeah, it's nice to see it come down, and we really want to see it stay down below 106 really. We're at 104 now, it's early days, so I was surprised to see it continue to come down at the moment really. So 106 is good because it shows a breaking down of the chart. 110 is basically pivotal, I'd say, to whether it's going to go on to make new all-time highs. Well, I suppose it is new all-time highs, or basically come down again. So this is your monthly here. Obviously we've had higher reads than this in the past, but to be honest, like, it is still a bullish chart when you look at this on the monthly, and my expectation is that oil will trade for probably a very long period of time, between about 75 to maybe 120. But it's nice to see that we're breaking down at the moment. But if we do choose to look at this from a TA perspective, it is bearish in the context of a grander uptrend, and we've come down to our 21 exponential at the moment. Exponentials do count on oil because it's relatively volatile anyway. It's a commodity, especially the volatility on it recently has been pretty crazy, and so this would be a bouncy kind of area, I would say. So to expect it to break down any further than this immediately would be surprising. I would expect it to try to come up and have a retest of the 110 and see where we go from there. Maybe we break down over time. We're looking at this on a weekly, so it's probably not going to take that amount of time. It's going to make a decision one way or another. But I personally think that for now, given the way that we're looking at things, the top of oil is in, which is good because that should filter through into inflation data, whether it be this next time round all the time after that. But it's definitely a good sign of things to come. Obviously we've had the rate hike, which is just a tiny little, here's 75 basis points, see how that does for you. It's not going to really do much. It will have a little dent in it, a tiny little scratch, but it's this which is going to have the main impact on it. And yeah, it's working out exactly as expected. So we won't bother looking at traditional markets too much. They're basically doing effectively what Bitcoin's doing, which is coming down. All right, coming down. Maybe, in my opinion, this is coming down to have like a retest of the supports, which is what I wanted anyway last week. I entered into 3 major indexes with a handful of stocks as well. And my thought was risk to reward of potentially maybe a 5% pullback from my entry point, between 2 and 5% depending on the index, with a potential max of about 35%. But looking at it again, probably more along the lines of 15 to 25%, to be honest with you. And that's just for the major indexes. So we transfer that information over to Bitcoin. You can translate that as opposed to an extent, given that Bitcoin is even more volatile. So we're talking about how yesterday was good, and we hit our target, which is the 50 exponential on the 4 hourly. So we hit that exactly, and that's where we decided to roll over from. Fine. So again, exactly as expected. And now we've come down to retest or scrape the lows. That $20,000 low basically is just, and that's where I'd like to see a reaction. To be honest with you, it doesn't have to happen there, but it would be really bullish if we did get a reaction there. We can sustain a pullback all the way down to just below 19,000, which is where these two candle bodies remained. Any lower than that, we might be looking at scraping even lower lows and having a bit more of a drawn out sort of dragging of the feet really of Bitcoin. So I'm not going to put it in any massively bullish light at the moment. It's not particularly bullish, obviously, we have to say, and we were expecting that rejection at that level, and that's what we've got. So there's a few things that we really need to see, which is basically holding up above just below 19,000 in order to gauge that bounce from here. But I'm not really seeing Bitcoin wanting to perform on its own. It's going to move basically. It's joined at the hip with traditional markets, and Chairman Powell is going to speak today. People are thinking he's going to declare the recession, right? That is likely to affect the markets. And so what I think is happening now, outside of just oil prices performing, you know, as we expected, as we see on the pre-markets, we're getting sold off, just like Bitcoin. Yeah, we're looking at Dow Jones Industrial Average, the Nasdaq, and everything else in the pre-market, all coming down. So just doing the same as what Bitcoin's doing, and my expectation is that people are holding off any positions as the old man is going to speak, and with that old man speaking will cause a direction which is not predetermined on the chart, which is a pain in the ass, really. Yeah, and it is kind of that simple. So it's a bit of a non-trading day. Now he's going to be speaking at the end of the day for the UK anyway. It was at 12:30 or something. UK American time. Is it Eastern Standard Time? I don't know. But it's not going to be late for us. You know, I'll be putting the kids to bed probably when all hell breaks loose one way or another. So it's not for me to really take part in any kind of futures positions. But with this kind of position and the way that it looks on the 4-hourly now, it doesn't look particularly happy. It does look like it wants to roll back down towards those levels, and maybe from there we could look at getting picked up. But it's very undecided at the moment. Like I say, yesterday it was good. We saw that bounce. We got the bounce up to the rejection area, that resistance, the 50 exponential. That was pretty much a sealed deal. Expectations of it breaking out from there anytime soon, as in like over the next few days, weeks, it's slightly unreasonable to expect that, just because the Bollinger Bands have pinched so tight since coming back down to these levels, and yeah, we're likely to just meander in here. Momentum's sort of dwindling and changing over, and even if we take it down to the 1-hourly, it doesn't look particularly happy, it doesn't look good, we don't have any divergences or anything like that, so it does favour, I would say, further downside. We're below all major moving averages here on the 1-hourly, looking to potentially generate a short signal on that itchy cloud. And again, 4-hourly is basically rejection central, really. So, I would say probably just take the day off here, because there's not much going on in these charts to really pinpoint any kind of, you know, with any degree of accuracy which direction it's going to go today. You know, my best guess is that it'll sweep these lows around 19,000, maybe dip a little lower, and then maybe meander up again. But it's going to depend very much on traditional markets. So if we think about traditional markets just very briefly, the same applies to what I said last week when I entered into those positions, those spot positions across the board, which is that I'm prepared for, you know, further down, below my entry point, between 2 and 5%, hitting these major areas of resistance. So we're talking Nasdaq roughly around 10,800, Dow Jones Industrial Average more or less where we were, but just a tiny little piece lower, 29,300 give or take, and then bounce from there. And again, this is all part of the everything bounce, which again we looked at food costs and we looked at oil costs. And we expected oil to come down, and oil is coming down. So this, like I say, it's kind of working as expected. What I wanted to see was that oil come down and these indexes come down as well, to, you know, to tag the lows, give them a little high five, you know, and then from there get the bounce that we're looking for. I still think this is all very much on the cards. I gave it, when I was speaking about it last week, I gave it a time frame of up to about 3 weeks, because there were short signals on wheat on the weekly. You would expect you know, a couple of weeks at least for that to play out. And interestingly, let's just have a look at oil actually on the daily. I doubt we'll be getting any short signals on this quite yet because it's been so bullish, but actually we're brewing one. I love drawing lines on these charts for no reason. Let's have a look. Nah, we're not going to get a short signal on this edgy cloud. We need this portion to go red first. We are below the cloud. Cheeky span's below the cloud as well, but no red portion, so there's no short signal. It doesn't look like there's going to be a short signal for a while. You know, this is going to take, you know, at this current trajectory, it's going to take a couple of weeks for that to even be generated on a daily. So I wouldn't hold out for a short signal on the daily here. 4 hourly, I imagine if there has been one, it's probably already played. We'll just have a look anyway. If the indicator will line up, yeah, so this has already played this short signal, that's fine. But we are incurring death crosses now on the 4 hourly, which is good. Which brings me to one last thing. I like to cram in as much as possible on these videos, but I'll bring me to one more thing, which is that many altcoins, top cap altcoins we'll say, are showing relative strength compared to Bitcoin. You'll have to start with the 4 hourly and then we'll start to work up from here. So we've spoken about this in the past. We were doing the live stream last night for Patreon members, and I was basically trying to not deter, people are free to trade what they want, but deter people away from absolute shit coins, you know, and think about the ones that actually show strength versus Bitcoin. This is XRP. I know how it sounds, but it's true. XRP showing relative strength versus Bitcoin. Golden cross all the way up, pulled back. We haven't dumped down into it, which is something you'd normally like to see, but we have crossed over this major area of support, stroke resistance. So it wasn't resistance on the way up, we slammed right through it, but this has been a historical area for XRP. So pretty mad stuff to see all this kind of happening. This would generate a long signal, or should I say a pump signal, if we can close above this cloud with a Chiku span above the cloud. So surprisingly, altcoins, you know, this is just one example, but surprisingly some of these altcoins look quite good versus Bitcoin. Obviously Chainlink, this is one of the more bullish ones. We came up to our 200 exponential, which is a really big deal. I mean, where's the 200 exponential on Bitcoin on the daily? Now, all the way up here, it's 37,000. So this doesn't necessarily mean that you're going to make loads of money trading altcoins, but it still says that these coins want to and may probably continue to outperform Bitcoin, whatever Bitcoin does, whether Bitcoin goes down or goes up. These all look quite good, so these are the better places to be, surprisingly. Obviously, entry points for anyone need to be thought about appropriately. You know, this was a golden cross, a massive slam down into it, a huge rebound from it. You really do have to realistically consider it coming down to the tune of what, 2,800 sats. These are all very realistic possibilities, and they still remain bullish setups. Look, I even brought up EOS, which has just got its golden cross as well. You'd expect a retest of that, about 448 sats. I know how it sounds. This is why I was bringing up these coins compared to things like BEPRO and VRA that people, you know, like to focus on, because, you know, they historically do massive moves, but I don't think we're in that kind of position for altcoins right now. But it's just interesting to recognize that there's a lot of bullish charts. I mean, this is a bullish chart so long as you consider your Bitcoin balance, your balance basically, rather than how much the Bitcoin's worth. These all do point to continuation of a trend, and I'm talking ICP and EOS and XRP, the sort of things that most people would completely write off and say nah. But you've got to say it how it is, and this is what it is. Yeah, these are decent setups on 4 hourlies that do require being pulled back into. We can see that's already happening for ICP, but you'll be looking really for support around 266 sats and see how that goes for maybe a rebound and continuation from there. Golden crosses often get dumped into. But yeah, like I say, I brought these ones up because they are generally the biggest top cap underperformers, you know, generally hated across the board. Not Chainlink, but I suppose a little bit more so, you know, over the last few years. But yeah, it's just an interesting thing to recognise that they are bullish in comparison to Bitcoin. And so if you are holding on to XRP or ICP or even EOS, you might end up doing better than you would if you were holding on to Bitcoin itself. Algorand as well is another good one. Jasmy, another good one. There's a lot of them. The ones that I generally like to highlight, like I say, I've only been trading recently Jasmy, Algorand and Chainlink, but I do have a lot of ICP, obviously, for the worst trade of my lifetime, is sitting in there and staking. So it's nice to look at it occasionally. Most of the time I look at it and I have to go off and cry for a little bit in a dark room. But yeah, I mean, for what it's worth, yeah, relative strength versus Bitcoin at this moment in time. Still underwater though by 50%, but it is what it is. Can't win them all. So I'll leave with you there. It's a lot to get through, I suppose. I'll make some videos throughout the day if I have time. But yeah, it looks like the everything bounce is still in play, and would consider that to start to take effect any moment from now, over the next 2 weeks, I would suppose. But yeah, I mean, nothing's written in stone, but we are seeing the start of the breakdown of fuel prices, which again is going to feed into that inflation data. And all we're looking to do is position ourselves before the inflation data comes out to show that it's peaked. And then for the vast majority of people who are sitting there patiently waiting for inflation data, oh, it's coming out today, the CPI is coming out today, oh, let's listen closely, man, let's listen. And you're like, I couldn't be bothered to sit and wait and listen. I needed to try and work it out myself, and I think when it boils down to it, it is basically as simple as, like, the only thing that we can really chart is food and fuel, mostly fuel, being oil, and it's worked quite nicely, 16% down since my expectation of it breaking down. That's going to make a difference. That is going to make a difference, and that should be reflected on the next CPI report, if not the next one, the one after that. Either way, the everything bounce looks still like it's on the cards, but remember, it's slow. You know, you need the masses to join in on this for it to really take effect. And just like any really decent trade from a spot position anyway, you do want to try and position yourself before everybody else jumps on the bandwagon. So right, I'm going to leave with you there. Thank you for watching, guys. Hope you have a nice day. Subscribe, like, and share with everybody. You know, your granny, you know, the local vicar. Share it with everybody. They need to know this stuff. Take it easy.